Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 9th of May. Starting with the FTSE 100, slightly disappointing, I suppose, but we're still above the 50-day moving average, the blue line there, around 77.40. As long as there's no end-of-day close back below that, we're probably safe from a dive towards 7,700, or the worst case, back to April support around 76.30. On the upside, looking for an end-of-day close through 7,800 to give us a move up to that February resistance line there, which is the major block on progress. Above that at 79.20, then we're looking at 8,000 plus, and then hopefully up towards 8,300 at the top of that rising trend channel from September last year. Obviously, that seems to be rather ambitious at the moment, but if we get through 79.20, that may be a possibility. In the near term, 7,800 the block, and also we'd like to see the RSI back above the neutral 50 level. It's at 47 at the moment, so not great, and implying that we are looking at a test for support first rather than a break higher. On to the DAX, which has generally in recent weeks been much better than the FTSE 100, although it's down today. Here we've seen old February-March resistance around 15,700 come in as new support for April and May. Looking for a definitive breakthrough 16,000 to give us a move to the top of that rising trend channel from September as high as 16,500 by the end of this month, although I suppose more realistically by the end of next month. Below 15,700, the floor of that September trend channel at 15,400 could be on the cards. But you can see here on the RSI window, RSI well above neutral 50 and recent bounces above that neutral 50 level. So this looks like a pretty healthy market. On to the Dow, which continues to frustrate. The main feature here is, or the features actually are the 50-day line there rising at 33,100, and then the one-year resistance line at 34,100. We want to see a break through that. Obviously, we've had many attempts at breaking through that, and they've all failed so far. Even the bull trap that we had at the beginning of the month failed as well, by definition. But while the 50 and 200-day lines are rising, we're still looking for that break through 34,000 and heading up to as high as 36,500 sometime over the summer. On the downside, not looking at anything lower really than 32,600, which is the 200-day line and the floor of that channel from the early part of the autumn. Moving along to Bitcoin, and here sort of dead action here, but what we were hoping for is that the 50-day moving average would support this market after a couple of attempts, or 3 attempts actually. It's actually failed to do so. That means we're looking at support at around 27,000 initially, which is post-March support, and then maybe down as low as 25,000, which was the old February resistance, and also a resistance back in August. But at the moment, not really looking for anything too spectacular on the downside. Hopefully just around the 26,700 to 27,000 area would suffice before this market finds its feet. If you're cautious and concerned about this market breaking down, which obviously there's always a chance, then you wait for the RSI to break back above neutral 50 versus 42 at the moment. So that would be your line in the sand, and also you would be waiting for a break of that April resistance line, 28,800, before pressing the momentum buy button. On to the stocks, and starting off with Alkemy, which has been quite a volatile market over the last few weeks, but looking a little bit better now in the wake of the rebound off the £2 area above the rising 200-day moving average. So that's a strong continuation signal. We also had previously in January and in March supports coming in near the 200 pence area. We've also bounced today above the rising, or the falling rather, 200-day moving average at £2.10, but at least above that 50-day line. Looking for the shares to hit that December resistance line projection at £3, perhaps as soon as the end of this month. But the key here, I think, don't want to see an end-of-day close back below the 200-day line, and we'd like to see a retest of the £3 area. The RSI bounced off the neutral 50 level as well, so that is encouraging as well. And we're means that looking for £3 is a reasonable thing to do. On to Ascent Resources, which I believe is one of the stocks which is looking for a big payout from some quarters. Here you can see that we've had a reasonable rebound for the stock, bear trap rebound from below the initial April support there around 3 pence. The low there around, what was it, 2.5, 2.6, something like that. But the current position is that we've broken a line of resistance there from September, broken through the 50-day moving average, which suggests that we're going to head up to the 200-day line at 4.1 pence and the top of that broadening triangle from January. The longer we stay above 3 pence, the greater the chance that this is a lasting turnaround, and I suppose for most people breaking through 4 pence might suggest that the shares are going to revisit 6 or 6.5 pence, which is where they were back in September. Next stock is one which has come up with a blinder of an announcement today, and the markets appreciated it. Should have appreciated it maybe a bit before, or appreciated the company before. We did have that buy signal there, the falling wedge breakout there around 2.5 pence back in January, and we're now back near the highs of February, looking for the shares to clear the 5 pence area over the next few days and head up to at least 6 pence, which is the top of that June broadening triangle from last year. Upside certainly in place while we hold above the top of the gap from the gap down rather back in April around 3.75 pence, above 3.75, looking for 6 pence. And if you look at the pattern here, it's a gap down and then a gap up, which is a massive bear trap island reversal. So pretty impressive charting signal. Let's see if the shares can deliver the goods above the 3.75 pence area. Very impressive indeed. Moving along to Contango, with perhaps the most famous wash plant in the world. Here we've got the shares breaking back above the 50-day moving average. They've also broken back above former one-year support around the 5 pence level, which leads us to conclude that above 5 pence of the 50-day line, we're looking for 6 pence initially, hopefully over the next week or so, and then up to 8.5 pence, perhaps as soon as the end of next month. 8.5 pence is the top of the April 2022 broadening triangle. We've also had a nice bounce for the RSI off the neutral 50 level, which should give us extra momentum over and above the bear trap from below 5 pence that we've had over the last few weeks. On to Echo, which has also come up with what looks to be a pretty important announcement. You can see that on the left side of the chart, the shares have blown out the bulls on quite a few occasions, but this occasion looks as though we're in a broadening triangle from back in February and bounced off that. The gap higher today completes an island reversal, so while we're above 0.03 pence, we're looking for the shares to potentially get back up to 0.12. If you're cautious, which you might understandably might be, then you'd be waiting for an end of day close above the 50-day line at 0.6 pence and not take any action unless the shares broke above that or break above that. We haven't been above the 50-day line properly since back in October. Next contender is one which had all the excitement over the weekend and something to offset the coronation perhaps. Here we've got a situation where we were looking for 3 levels really. 1.4 pence, which was resistance on the way down. 1.8 pence, the triangle target there from back in October. And then above 1.8 pence, looking for as high as that April 2020 resistance line projection, as high as 4.5 pence. So far today, we've had the 1.4 pence level come into play. That's actually the low of the day, so we're quite pleased with that. Want to see an end of day close above 1.8 pence to give us up to 4.5 pence. I think that's simple enough in a situation which may be slightly complicated on a fundamental basis. On to Let's Explore, which has gapped up yet again. We had the gap up through that falling wedge that we had from the beginning of the year. That was versus 2.6 pence. So we remained above the top of the gap there, around 3 pence. And now we've got a new gap up higher, which suggests that the longer we stay above 3.5 pence recent support, the greater the chance of a move to 5.5 pence. Perhaps as soon as the end of this month, but at least by the end of next month. If you're cautious, you wait for an end of day close through that old peak there around 4.15 pence before assuming that 5.5 pence is on its way. Nice uptrend line in the RSI window as well, which should add to the momentum there. On to OSI, which is otherwise known as Osirium or Osirium. Here you can see that the shares are up 13 pence with a gap higher. Unfilled gap to the upside. We've had bullish divergence there, and the bears have been a bit quiet for some weeks now, so maybe that's helped the cause as well. Above recent support around 1.5 pence, looking for the 50-day line initially around 2.05 pence. Big picture target over the next 2 to 3 months as high as 4 pence, but obviously we'd like to get through that 50-day line first. The 50-day line is also the level, the old support there at 2.05, so while we're below that, we're still looking for the stock to find its feet. On to Phoenix Copper, which has tentatively been recovering over recent weeks. The key thing today probably is for the shares to remain above that April peak there at 25.5 pence. The more end-of-day closes we get above that, the more confident we'd be that the shares will not only hit the 200-day line there at 28.5 pence, but hit a best-case scenario target as high as 39 pence as soon as the end of next month. Added confidence at the moment with the rebound off the neutral 50 RSI level, so that gives us some comfort that the shares are actually turning around in a meaningful way. I suppose there is a line of resistance there broken from back in March, and obviously we want to see the shares remain above that line and above RSI 50 as well. Moving along to Rainbow Rare Earths, which had a blinding announcement today, another company with good announcements. This week has started off with lots of positivity in that sort of way. Here we've had a trendline break, and the premium placing has been taken well, 8.6 pence, the resistance line break there. Looking for a return basically to the 13 pence area by the end of this month, as soon as the end of this month. While we remain above 8.6 pence, and that's a post-July resistance that we're looking to have taken out. The other positive about today's price action is that above 8.6 pence is back above the old November support, so it's a bear trap in place, and that's why we're looking for 13 pence. To finishing off on the bullishness, we've also got an uptrend line in the RSI window. That's a bullish divergence, so lower lows for April, May, but higher RSI trace, and that flagged the potential turnaround that we are seeing at the moment. Moving along to the last few. First is Shield Biotherapeutics, and here, or SkinBio Biotherapeutics rather. Apologies. Here we're looking for a trendline break there from November. That's around 18.5 pence above that. Big picture target over the next 1 to 2 months as high as 30 pence. But obviously we want to see those the end of day closes above that level, and the RSI stay above neutral 50 as well. So looking for basically 18 pence plus here to give us up to 30 pence on SkinBio Therapeutics. Trellis is one of those stocks I didn't really want to look at, but the chart said look at it, so here we are. Here we've got an uptrend line in the RSI window from back in February. We've had a break above the 50-day moving average at the end of last week at around 6.6 pence, and above that we're looking for the top of a broadening triangle as high as 12 pence as soon as the end of this month. So looking pretty impressive there, especially as it's also a bear trap rebound from below the old September support there at 7.25. Above that we are looking hopefully for 12 pence. On to Tirupati Graphite, which delivered the goods today in terms of showing that it's actually producing and growing. Here we've got both the 50 and 200-day moving averages rising. We've bounced off the 50-day line at 30 pence, so hopefully that'll be the floor for the shares. Initial target here, the April peak around 38 pence, and after that looking for 55 pence as soon as the end of next month.